And talking about profit, that leads nicely into fatal mistake number two, because I really drilled in on this fatal mistake around the unhealthy fundamental gap in understanding how you deliver profitable revenue growth. So I'm really intrigued in your experience, because I know certainly this is where I get really frustrated, that people go and create these products and services, but they don't really understand how they make money and what the profitability is by products and service. So is that an experience you share? And what's your take on that?
It's a big take. Often people know the direct costs. So they'll turn around and say, if I'm a restaurant, I know what I bought my food for, I know what I pay my staff, therefore I'll make a profit. The issue is that, but you've got a heating bill, you've got a gas bill, you've got your accountants to pay, you've got all different costs associated, right, with running that business. And often people don't realize that the overhead costs of running the business, not the direct cost of producing the good or buying the good. And therefore, as a result of that, there you go, oh, my gross profit's good, but the net profit is in minus. So
Yeah.
my personal approach is I look at my head office costs and I always divide them by the number of clients I've got. And actually, that means that when I do a pricing, it includes the direct cost, the indirect cost, so I know that all are being covered, and then I add a margin on that allows me to make a profit. Profit's not a bad word. Profit enables me to invest in the business. Profit enables me to educate and train my team to make them in a position to give even better service. And actually, it enables me to get the latest technology out that means it's easier to deal with from a customer perspective. So, actually, sitting down and working out your costs plus your margin and then how you're going to reinvest some of that. And again, you talk about that need to invest because if you don't invest in people or product or process or technology, ultimately you suddenly lose a competitive edge. And that's when your customers go elsewhere. And that's when you're in a doom loop rather than you're in a growth cycle. So I think it's really important that people understand it. And that's what I mean right at the very start when I said, as well as being able to go on a catering course and learn how to cook or be a mechanic or be an accountant, really, really go and learn how to run a business. And that's why your book is so helpful.
Yeah, and you've hit the nail on the head. And you talk about measures that matter. And I know your huge focus that great leaders today are data driven. Understand your metrics, understand your benchmarks of where you are in the profit side. There's two fundamental levers that you're working with, which is your GP, your gross profit, which is driven out of your revenue minus your direct cost of sale equals your GP. And what amazes me, Chris, is most people do not understand what their GP is, the flow further up line. Your revenue minus direct costs equals your GP. You've got to know that number. And for most businesses, a good range on that is 50 to 70%. I talk about the different businesses in the report, the different sectors, but you should be aiming for a 50, 70% GP, 50 being the bottom, 70 being really good, but within that range. And then your point around, then after your direct costs and your GP, then what's your overhead cost that then will drive your operating net profit or your operating contribution pre-tax. And they're your
Yeah.
two magic numbers that you need to be focused on, your GP and your net profit. And if you're managing those and you're really clear about your target range of where you want to be, but the number of business owners I talk to who A, they don't have a benchmark for where they want them to be, and then B, they're not even tracking them during the course of the year. That has to be the definition of insanity.
Oh, it's the classic why we started off with why people look at turnover and think they're doing all right. So no, I've got in, but I don't know what my costs are, and I don't know why my costs are why they are. I don't know if they're inflation proof or whether or not the behest of a change in the market or a change in government policy. And all of this comes as a surprise, and it shouldn't. The budget last year was very clear that there would be changes in employers' national insurance. I was speaking to clients, and the budget was October. I was speaking to clients the following April when the first payroll was processed who said, Chris, I can't believe this. It's cost me more money. I said, You knew that 6 months ago.
Yeah.
Why didn't you understand and model the impact it had? And that's why good leaders understand the numbers. And all numbers are data. But what data gives you is the opportunity to have insights. And again, you say in your report, we're overloaded with data. but we're underwhelmed with insight. And it says, what does this number tell me? How do I model that with the information I have about future? So we all know that, 4 times a year, your energy bills go up. We sort of know that quarterly, some commercial premises increase their business rates or their rent. So why wouldn't you model them into the future and understand the direction of travel? Therefore, that's when you can start adjusting your prices or your costs to ensure that you're still on track to make your profit. Because it shouldn't come as a surprise. That you can do the math and you follow it through, and ultimately, businesses, it's a pretty simple one. I generate revenue and I spend cost. And if I've got more money in than I spend, there's a fair chance I'll make a profit. So going through those lines and actually challenging yourself, when was the last time I looked at the cost that I've incurred and asked this question? Can I get it cheaper elsewhere?
Yeah.
Can I get competitive quotes? How do I do that? Why do I do that? Why is that gone up in that line gone up? And who in my team has actually asked the question, why is it going up? Can I get it cheaper elsewhere? Should I switch suppliers? Because I always have a very simple model to increase a business profitability by 10%. I sit there and go, just grow your business with new customers by 3.3 and sell more to your existing customers. Then look at your direct costs and reduce them by 3.3 by going, I'm going to get a competitive quote from an energy supplier, a food supplier, a wholesaler, and then 3.3%, how can I make the people more productive? Because you talk about productivity in the report.
Yeah.
Because if somebody's been doing a job a year, they should be doing it faster and more accurate than a year ago. Why? Because they've had a year of getting better. So therefore, I expect you to be able to deliver more from a productivity perspective. And let's remember this country, one of the reasons we're in a really, really difficult financial situation is that the sort of OBR, the Office of sort of Fiscal Responsibility, is saying we actually are not productive as a nation compared to other nations. So productivity is a really, really important. What's your return on investment, whether that's people, process, cash? I see people with cash in the business and I say, do you put that in a special savings account to get interest on it? And they go, no. And I go, well, actually, if you go to some of the new challenger banks, they can give you really attractive rates. And as a result of that, you can get money for free. It's called interest and it's business interest, right? So have a strategy. And that goes back to in your report about managing cash flow, right?
And
Even
that's
when you've got surplus cash and
yeah.
it's your manage.